Good evening, and welcome to the Crypto Overnighter. I'm Nikodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. And it's 10 p.m. on a Wednesday, April 26th, 2023. Apple has quietly removed the Bitcoin white paper from the latest beta version of its operating system upgrade. Satoshi's masterpiece was found within Virtual Scanner 2 in macOS. Even so, nobody's sure why it was put there. Some speculate that it was a joke among Apple engineers. Others have suggested that it is a sign of Apple's support for Bitcoin. The white paper's removal comes when Apple faces ever-increasing regulatory scrutiny worldwide. In particular, the company is being investigated by the European Commission for alleged anti-competitive practices in its Apple Store. This likely further fueled speculation about Apple's stance on Bitcoin. The company has not made any public statements about Bitcoin. However, its suggestions suggest that it is at least open to the idea. Meanwhile, a California court has ruled Apple violated state competition laws by barring app developers from using alternative in-app payment methods apart from its own. And it's clear why. Apple's cut is a 30% commission. This decision may just clear the path for cryptocurrency and NFT projects to add more functionality to their iOS apps. This ruling was made by the U.S. Court of Appeals for the Ninth Circuit. This was that Apple versus Epic Games case. The court upheld a lower court's decision from 2021. They said that Apple's anti-steering provision harmed Epic. So this anti-steering provision is an Apple policy. It says iOS developers cannot communicate out-of-app payment methods through things like in-app links. They don't want you to tell your customers how to get around paying the Apple tax. This policy increased the costs of Epic's subsidiaries' apps on Apple's App Store. It also prevented other app users from becoming would-be Epic Games customers. Tim Sweeney is the founder and chief executive of Epic Games, and he tweeted the ruling, quote, frees iOS developers by allowing them to direct consumers to alternative payment solutions. The court's ruling is a significant victory for Epic Games. It will have far-reaching implications for Apple's App Store. It could also make it easier for crypto and NFT projects to offer products and services to iOS users. It remains to be seen how Apple will respond to the ruling. The company said that it was disappointed with the decision and is considering its options. And I want to thank you for tuning in this evening. And in return, I'm going to ask you to like, follow, and subscribe to the Crypto Overnighter podcast. It is a big help when trying to reach new listeners. So thank you. The New York Federal Reserve published new rules for counterparties looking to use its money market balancer. This has cast uncertainty over stablecoin issuer Circle. The updated guidelines could hinder Circle's access to the Fed's reverse repurchase program. This program is how the Fed sells securities to eligible counterparties. This sale comes with an agreement to repurchase them at the maturity date. The Circle Reserve Fund is a money market fund managed by investment management firm BlackRock. They are one such fund only available to Circle and therefore could be deemed ineligible under the Fed's statement. The regulations governing these kinds of money market funds aim to ensure that these funds can meet potential redemptions by investors in a timely manner. Funds under this category must hold at least 10% of their total assets in daily liquid assets and at least 30% in weekly liquid assets. Approval into the Fed's program would allow Circle to earn interest on excess funds by investing in low-risk Treasury securities, allowing the stablecoin issuer to earn interest and help maintain the stability of its stablecoin. Meanwhile, the crypto community is calling out the apparent hypocrisy of Gary Gensler. They're mocking the head of the SEC. This is after a 2018 video emerged of him stating that cryptocurrencies are on par with commodities or cash and that they are not securities. The video came from a blockchain and money class in the fall semester of 2018. And this course was taught by Gensler when he was a professor at MIT. This was before he became the chair of the SEC. On the topic of initial coin offerings, he said, quote, 3/4 of the market are not ICOs, or not what would be called securities. He said the US, Canadian, and Taiwanese markets are the 3 jurisdictions that follow something similar to the Howey test. He said, quote, 3/4 of the market is non-securities. It's just a commodity, cash, crypto. He did briefly acknowledge ICOs, that they may spark its securities debate. However, he concluded 3/4 of the market is not particularly relevant as a legal matter. Now, many of us were stunned by Gensler's remarks. Coinbase CEO Brian Armstrong commented, wow, in response to an April 26th Twitter post shared by CZ Shark. Eric Voorhees, the founder of the crypto trading firm Shapeshift, asked, when does someone get arrested for fraud? Now, in Gensler's defense, U.S. lawyer Preston Byrne explained that professors and law enforcement work in different capacities. He said Gensler should not be held to the same views as he had back then. Another U.S. lawyer, blockchain technology specialist Jonathan Schmefeld, challenged Byrne. He said Gensler's interpretation of the Howey test should not change based on what capacity he's acting in. Now, this drew a follow-up from Byrne. He said, quote, I mean, when I talk with clients about this stuff, there are 3 answers. What I think the law is, how I think enforcers will interpret it, and what the law should be. Right now, he's limited to giving only one of those answers by virtue of his position. So here's my take on it. Gary Gensler is the perfect example of a bureaucrat who changes his position for political expediency. I mean, he's the one who did it. It was him in 2018, when he was a professor. He's the one that said that 3/4 of crypto are not securities. But now he says he's changed his mind. He says that most cryptocurrencies are securities. This is just another example of how bureaucrats will say whatever they think will get them more power, more authority, even if it means just casually changing their positions on important issues. It's time for us to hold our public servants accountable for their words and actions. We need to demand that they be honest and transparent. We need to demand that they stand up for what we believe in, even when it's not popular, even when it's something they don't like. We can't let them continue to get away with changing their positions on a whim. We must hold them accountable and demand they protect us, not their career ambitions. Binance US has canceled its deal to buy Voyager Digital. They specifically called out a, quote, hostile and uncertain regulatory climate in the US. This deal was approved by a bankruptcy court judge last month. It would have allowed Voyager customers to become Binance US customers. However, the plan faced significant government scrutiny. It even prompted the SEC to reveal that SEC staff believes Binance US is operating an unregistered securities exchange in the US. Apparently, they never saw Gensler's video. Now, with that deal canceled, that means that Voyager will distribute cash and crypto to customers using its own platform. They said that they're incredibly disappointed by the move. They also said that they're focused on moving forward with self-liquidation. The turmoil in the crypto market has raised concerns about the stability of the industry and the safety of customer funds. Regulators are now taking a closer look at crypto exchanges, and it remains to be seen how the industry will weather the storm. Because in other bankruptcy news, FTX sold LedgerX to an affiliate of Miami International Holdings for $50 million. Now, this deal still requires the approval of the United States Bankruptcy Court for the District of Delaware. It's expected to close in the second quarter of this year. LedgerX was founded in 2017. It's one of the few regulated crypto exchanges in the US, offering futures and options trading on Bitcoin, Ethereum, Litecoin, and other cryptos. The sale of LedgerX is a reminder that FTX's restructuring is still incomplete. FTX CEO and Chief Restructuring Officer is John J. Ray III. He said the sale of LedgerX is, quote, an example of our continuing efforts to monetize assets to deliver recoveries to stakeholders. So what does this mean for the crypto industry? The cancellation of the Binance US deal and the sale of LedgerX are signs of the challenges facing the industry. The market has been volatile in recent months. Regulators are particularly taking a closer look at the exchanges. This has led to uncertainty and instability. Now, we're going to be watching to see how the industry handles this. However, the recent developments are a reminder that this industry is still in its early stages. The price of Bitcoin reached a record high in Argentine pesos last week. Not a surprise given the persistent inflation in the country. The Bitcoin to Argentine peso exchange rate crossed over the 6.59 million. Since the peak, the rate has corrected down to around 6 million. And that's down around 9%, but it's still up more than 100% year to date. Bitcoin's growth in Argentine markets coincides with the continuous ARS devaluation. Traders were paying as low as 460 pesos to buy $1 from the black market on April 24th. That is more than double the official spot rate that pays 220 pesos for the dollar. One US-based consultancy firm noted that Argentine central bank's reserves have dropped by half to an estimated $1.3 billion since 2019. That has raised the risks of further peso devaluation. So that's a crash of nearly 99% from the currency crisis peak of 330 pesos in 2018. This has led locals to seek shelter in the dollar, and the US dollar has become hard to find due to the rising demand in the country. That's why you can have an official rate and a black market rate. As predicted, Bitcoin and other cryptos have started to emerge as alternatives. Operating outside the purview of governments and central banks, data shows that Bitcoin's peer-to-peer weekly volume in Argentina reached a record high of nearly $30 million on the Paxful exchange back in March. A study in 2022 found that nearly 60% of Argentines believe in Bitcoin's abilities to safeguard the value of their savings for the long term. Coinbase also recommends Bitcoin become a legal tender in Argentina. The National Commission of Value is Argentina's securities regulator. Earlier this month, they approved a Bitcoin-based futures index on the MAPA-ROFEX exchange. That index is set to debut in May. The derivative will enable accredited investors to get exposure to the Bitcoin markets. A recent bill proposed by the Ministry of Economy asked citizens to declare their crypto holdings. We covered it when they announced tax benefits for doing so. Also, in December of 2022, one Argentine province announced its intentions to issue a dollar-backed stablecoin. And finally, our cover story for tonight. In Texas, crypto advocates are fighting a bill that would regulate Bitcoin mining. The bill is SB 1751, and this bill would cap the incentives that crypto mining firms can receive for reducing their energy consumption on the state's power grid. And it would also prevent certain companies operating data centers from receiving abatements on state taxes. Crypto advocates argue that the bill is unnecessary and that it would harm the state's growing Bitcoin mining industry. Bitcoin mining is actually good for the environment. It helps use excess energy that would otherwise be wasted. The bill is currently being debated in the Texas House of Representatives, and I really couldn't say which way it's going to go from here. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe, leave a rating, maybe a review. And in the meantime, we'll see you tomorrow night.